Good morning, traders from each and every part of the world. You're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. And if you can hear me, kindly comment on the chat box. Good morning, so that we proceed with less hesitation. This is going to be a pre-recorded YouTube video to mean that you could find it on our YouTube channel at HFM Kenya. You go to YouTube and search HFM Kenya. You will find this content there placed for you to review at your own time. And on also the YouTube channel, we have quite a number of informative, educative videos that you could see and get into practice so that you bridge your the educational gaps that you might have to enable you maximize on the opportunities in these global markets. And today we will speak exclusively about gold because it's making history. And gold is making history by breaking higher highs that it has not done for over 5,000 years. And we'll be talking about that and why. And I remember in this series of the Daily Morning Market Call from the beginning of this year, we anticipated that the entry of new personalities in power in the United States is going to alternate market movement. And by this, I mean late last year, we spoke so much about economic forces driving the market. We will still be speaking about them, but now we see an entry of a new phenomenon behind the driving forces of the market. And what is this? Geopolitical forces which are caused by global leaders in various parts of the world. And our focus is on one man, Donald J. Trump, the 47th president of the United States of America. Now, the shift from economic forces or monetary or what you would like to call monetary policies into fiscal policies, and fiscal policies are affected directly by people in power and people in significant positions of powers like Donald Trump. We shall see how this goes about. And when I speak about fiscal policies on budgeting by governments, I'm trying to echo about how other countries are restricting others in the global space in doing business. And by this is the two famous letters TT, which means Trump's tariffs. Now, on to that, I begin by talking. Let's look into gold also. So gold prices soared yesterday, as we're walking into today. Right now, it's trading quite high. We shall see that on the charts in a few, hitting a fresh all-time high above the 2850 mark. And what causes this? These are the fears of overgrown uncertainty in the global markets, which are brought about by the Trump's trade tariffs. And somebody might ask, what are these tariffs? Tariffs are tax imposed on certain imports and exports from foreign countries. So a good example would be the 25% tariffs which have been placed on Canadian products being imported to the United States, all right, and the 10% tariffs which have been imposed on Chinese products being taken to the United States. So this is causing uncertainties, and it doesn't end there. We see the administration of Donald Trump giving suggestions that it might go further to impose tariffs in some countries in Europe. So we see the United States, they are putting a quite charm offensive to try and put tariffs on other countries. And the argument is other countries have taken advantage of the United States, and it's time they pay back. If you remember what Trump famous phrase when he was campaigning to make America great. So by these tariffs, the American economy is able to retrench some of the perceived monies that they lost in previous administration by taxing others extreme relatively high in fact extremely high by global world standards. So as we proceed, also it's important to note that the gold prices have surged to new highs with safe haven assets in demand as global trade tension rises. Now, as we see the global tension rising because of these tariffs that are being imposed in by United States on other countries, investors are now rushing to buy gold because gold is seen as a safe haven. Now, when this happens, of course, the demand of gold will increase. And when the demand of gold increase, this would mean that we will see gold in a bullish momentum. I believe we have talked about this quite a number of times, and with emphasis from the 18th to 20th about of January when we saw Donald Trump coming into office. Also, on the flip side, it's important to note that these countries will not sit back and just pay. Okay, they will tend to negotiate for better deals, and some of them who will find it hard to negotiate, they will also impose tariff on United States product. China is very bold on that. Okay, but we see other countries like Canada and the US trying to go into a negotiation to try and curb, reduce these tariffs, with a specific example being Mexico. Mexico has been able to negotiate the tariff relief and go into a 1 month period where they're going to see on how to reduce this. Now, going on to the charts. So we see gold from the daily time frame, begin there. Gold has just broken the area of interest at 2786.19. We spoke about this when it that is late last week, when it retested here. We said we would want to see it break above, and this speculation of wanting to see it break is brought about by the tariffs which were being imposed with the entry of Donald Trump into office. This is likely going to be the case for a pretty long time. We remember back in 2019 when Donald Trump took office, we experienced quite high volumes and volatility in the market. By that I mean trading aggressively in one direction. For the market, in this case, we are in a bullish trajectory. We are likely to see this in the next 4 years. And a safe entry here would be for scalpers and traders. Of course, they would go to a lower time frame, picking the 1 hour for instance, would wait for retracement to certain areas of interest where we see repeatable patterns and get in for buys. In short, we'll be looking for buys, that is for all for scalpers and day traders, and for position traders and swing traders would still be holding on for the long-term buys that they got in previously. Now, for scalpers, an argument would be put forward that they would take advantage of the short retracement to the downside for sales, which is a risk-on approach. It's quite risky, but it's doable. For the risk-off approach, would be looking for buys. Once it retraces, you get in for continuation of the buys. Now, with that said, it will be interesting to see how this plays out into the future. And remember, last year we had gold being bullish 23%, an increase in the value of gold by 23%. What will be the case in 2025? Possibly even more, possibly slightly above 23. I guess we shall wait and see. So we'll be monitoring this among other factors and forces moving the financial markets. And with that, allow me to put it as a disclaimer that this by any chance is not financial advice. It's purely meant for education purposes. It is important to do your due diligence and most importantly observe risk management. And in the instant you would want to learn more about this, it is important you get in in our website. Let me proceed to show you. In the instance you don't have an account and you'd like to venture into this, visit hfm.com, and where I'm putting the cursor of registration, there's the login if you're an old client. But if you are a new client, register, attempt to register for an account, and it's going to require you to fill in your details, and that will have our experts get in touch with you to help you with the process smoothly for easy transition. And of course, also reach out to your fellow mentors who have led you to this chat box for them to guide you. It's absolutely free to register for an account, and from there you will be having a much more clear aspect on how to proceed moving forth. With that out of the way, guys, see you tomorrow, the same place, the same time, to do things the same way that has proven strategically profitable. Until then, God bless and take care.